This is the luxury world. Get inspired with us today and tomorrow. The acquisition of Rolex by Bucherer has caused significant ripples in the watch industry, and the complete consequences are yet to become clear. This unexpected development raises questions about its effects on other Rolex retailers, its influence on the brands under Bucherer, and the potential repercussions for the broader watch market. In this video brought to you by the Luxury World, we thoroughly examine every facet of this groundbreaking agreement and explore how it might reshape the watch industry landscape. If you have not already subscribed to our channel, we encourage you to do so now to stay informed about our future videos. Before we delve into the major updates, it is important to issue a word of caution. When seeking market updates or pricing analysis, it is essential to exercise caution when relying solely on information from dealers. While not all dealers are inherently biased, it can be challenging for them to provide entirely unbiased perspectives. As we progress through this video, you will gain a deeper understanding of why this caution is warranted. Now, let us dive into the significant news. There has been some talk among reputable dealers suggesting that Rolex's acquisition of Bucherer will reshape the luxury watch market. To fully grasp this development, we need to consider several key factors. First, we will seek the reason behind Rolex's purchase of Bucherer. Next, we will examine how it will have an impact on other Rolex authorized dealers. It is also essential to assess the impact on the stock and business of Watches of Switzerland, another significant player in the watch industry. This acquisition is likely to have consequences for the various other luxury watch brands carried by Bucherer. Finally, we will explore how this move could potentially influence the operations and outlook of reputable watch dealers. Stay tuned as we dissect each of these factors to provide a comprehensive understanding of the significant development in the watch industry. Let us begin by addressing the first question: why did Rolex acquire Bucherer? The answer is, in fact, quite straightforward. Bucherer represents Rolex's largest sales channel, and Rolex wanted to avoid the potential risks associated with a new owner mismanaging the company, which could negatively impact sales. Consider the significant effort required to establish a latest sales network from the ground up. This would involve acquiring land, constructing facilities, and investing in personnel training, incurring substantial costs. Moreover, the time required to build such a network would be considerable. Additionally, Rolex is actively working on increasing its production capacity. In this context, it would not be practical for Rolex to divide its attention and resources between expanding production and creating an entirely new global sales network. Therefore, acquiring Bucherer aligns with Rolex's strategic objectives and makes a lot of sense for the company. Now into the implications of this acquisition for both Rolex and Bucherer. One aspect that has not received much attention is the bundling requirements imposed by Rolex on its dealers. For instance, when a dealer wants to purchase a Daytona, they are obligated to purchase other Rolex models as part of a bundle. This practice is known in the industry as bundling. Indeed, Rolex will not impose bundling requirements on itself, as it would be counterintuitive. This could potentially lead to a much improved customer service experience, as customers may no longer feel pressured to purchase other jewelry or watches they may not be interested in. Another significant implication of this acquisition is the potential for increased flexibility in pricing. Rolex, as the owner of Bucherer, may have more control over pricing strategies and promotions. This could result in a more dynamic pricing environment within the brand's retail network, which could benefit both Rolex and consumers. With Rolex now owning the Bucherer, there is likely to be more flexibility in pricing margins. While prices may indeed rise to keep up with inflation and reflect current demand, an essential point to note is that Bucherer will not need to report record profits to Rolex. They are now part of the same entity. This situation creates additional pricing flexibility for Rolex, allowing them more room to adjust prices to maintain profitability and respond to market demand, whether that means adjusting prices upward or downward. So, what happens to other Rolex authorized dealers in this context? The competitive landscape among Rolex dealers may shift, and they may need to adapt their business strategies to remain competitive in this evolving environment. The ultimate effects will vary based on several factors, including the location and market dynamics of each authorized dealer. Many people are understandably concerned about the future of other Rolex authorized dealers. Like most business operations, they need to analyze local demographic data and determine the most suitable location for retail operations. Rolex is expected to perform a comparable assessment. Bucherer does not encompass all areas where having an authorized dealer would be financially advantageous. There are instances where independent authorized dealers can prosper, thanks to factors such as real estate expenses, labor recruitment, and logistical complexities. It is important to note that not all independent authorized dealers will vanish. such an outcome would be detrimental to business. So, what occurred with watches of Switzerland, and why did their stock experience a decline? Considering the previous analysis, markets tend to exhibit such behavior since they react strongly to significant news and then stabilize. However, a crucial question remains. What about the other brands carried by Bucherer? How do they respond to this situation? They will continue to be sold by Rolex. Brands like Omega and Longines will find this arrangement satisfactory. Let us discuss an economic theory known as the socially optimal solution. What does this theory entail? Well, it proposes that if all costs and benefits are reflected in the supply and demand curves, then the market equilibrium results in a quantity where the marginal social cost aligns with the marginal social benefit. It means that the best outcome occurs when most customers must travel only a short distance to buy a product. For instance, have you ever wondered why competing car dealerships are often situated near one another? Even though they are competitors, it might seem counterintuitive, but there is a logical explanation. The reason behind this is that when customers must travel long distances to visit car dealerships, it can deter them from making a purchase. This is because the costs, both in terms of time and money, associated with searching for a new car increase. When customers can easily find several car dealerships in one area, it benefits all the dealerships. This convenience factor leads to higher sales for all of them. So, yes, it makes sense for competitors in the retail industry to cluster together because it boosts sales for everyone involved. This strategy benefits Bucherer because it leads to increased sales by offering multiple watch brands rather than just Rolex. Moreover, other brands recognize that Rolex draws customers into their stores, so they also stand to gain. The underlying principle is all about reducing the costs consumers incur when searching for watches. The lower these costs are, the higher the sales tend to be. Now, what is happening to the gray market? Well, flipping watches in the gray market is likely to become even more challenging. Nevertheless, with Rolex directly overseeing Bucherer, the situation becomes more challenging. Why? It is because we know that the Rolex blacklist exists. If Rolex discovers that you are flipping a watch, they may refuse to sell you another one unless, of course, you are dealing with a dishonest authorized dealer. And now, with Rolex at the helm of Bucherer, Rolex has even more control. Some reputable dealers are now suggesting that this situation benefits Rolex and is the reason for their acquisition of Bucherer. It is a convoluted perspective. However, it is important to clarify that the value of luxury goods, like Rolex watches, is primarily determined by their official retail price, not some fluctuating secondary price. The challenge for Rolex is that the excessive profits generated in the secondary market do not contribute to their bottom line. Instead, those additional profits go to reputable dealers. Furthermore, Rolex is aware of the brand damage that can occur when used prices reach excessively important levels. Rolex does not benefit financially from the higher-than-retail prices in the secondary market, and any negative perception and brand damage are associated with them. So, why would Rolex be content with this situation? The truth is they are not satisfied, which is why they are strategizing to boost production. To reiterate, the profits generated in the secondary market do not flow back to Rolex. The only ways Rolex can address the issue of high demand are by raising their prices, increasing production, or a combination of both. The acquisition of Bucherer is intended to facilitate their production expansion. From Rolex's perspective, this is a smart move. What are your thoughts about Rolex acquiring Bucherer? How do you think this would affect the gray market? We would love to see your comments and opinions in the comments section below. If you enjoyed the video, we would appreciate it if you let us know by leaving a comment and giving it a thumbs up. Do not forget to follow our channel for more content. Thank you for watching The Luxury World, and we look forward to having you join us in our upcoming videos.